Welcome to Is It Bad for the Economy, the podcast where we explore whether Trump's economic policies are helping, hurting, or just a load of hot air. Folks, this is going to be a little bit of a fly-by-night operation. We're recording this on Tuesday, April 14th. Happy Tax Day Eve. The NBA playoffs are upon us, and I'm going to try desperately to get this out tomorrow morning.
We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time.
The biggest headline that we got since we last recorded with Tagveer on our housing episode was, of course, inflation. We got that CPI report. With food and energy, it's 3.3%, all the way back up there. Without food and energy, it's still 2.6%. Higher than the Liberation Day low. Banker Bill, you've been making one argument the entire time, every single time I bring up inflation. You say it's range bound. When it's bad, you say it's going to go down. And when it's finally getting a little better, you're saying it's going to go back up. Are we still range bound?
Yes, absolutely. And let's go through a number of charts here. So first and foremost, we look at year over year, right? So you're referring to CPI, Consumer Price Index for all consumers, less food and energy, 2.6% versus March 2025. All consumers for X food and energy was 2.6% and 3.3% year over year. That's the best number. The rest of it here, I'm sharing the chart with you right now. 2-year chart going back to April of 2024. Does any of this look like it's going down to you now? Any of this?
No, it looks range bound.
Do you see that this administration has made any progress whatsoever on inflation?
No, even the numbers that are looking a little better are all pointing back up.
Their best figures were the March and April prior to the tariff. Best. They're best. Right? How about mortgage rates? How do those look? 2-year chart. They're down. 1-year chart. They're down from a high of 7%. But look at this rate of freak out from the Iran war here. We were at 598 on average on Thursday, February 26th, week ending. Now we're back up to 630, 6.37, 6.37%. Right? It's almost a half a point in 6 weeks. Just to give you some context, you look at some other instances where we've had a little bit of a spike. Look at how long, Kobe, they take to come back out. A 1-month move takes 8 months to work its way through. More charts for you. Let's look at the protein basket.
Hold on real quick.
Yeah, go ahead.
Explain that quickly for me.
Yes.
Why does fertilizer and oil being trapped behind the Strait of Hormuz make mortgage prices go up?
Inflation, risk to inflation to the upside, increases interest rates because of higher inflation risk. Now, the flip side to it is if there's, you hear this term demand destruction, is just to mean that, people don't want to buy it anymore, which means a recession. And so if that were actually to occur, you would see your expectation would be interest rates to fall because economic activity is going to fall with it. Right. But what we're pricing in right now, what mortgage rates are pricing in now is a bottleneck. Right, where you're getting all of this, you're getting the same amount of demand, no change in demand, but the change is for oil, right, and energy. So that's going to go up, and that flows through everything else, right? So it's a situation, again, where you have too many dollars chasing too few goods, results in sell-off of treasuries. Why would I want to own treasuries? I think inflation is going to go up, so I think rates are going to go up. I'm going to sell my treasuries. That's the exact move you've seen in the 10-year yield right here on the screen. You see that flowing through directly to mortgage rates.
Yeah.
One area that they've got that still doesn't look terrible, but still, or I should say, one area that it's not going up, but it's kind of flatlined is the protein basket. Eggs are the cheapest they've been in 2 years.
And that's the dashed purple line here, right?
Yes. Beef's the most expensive it's been in 2 years. Now, the beef, a lot of that, you got to remember, some of that's due to a herd shortage. We had a drought a couple years ago. That's now flowing through. You're going to have more expensive beef. You have a lot of wealth in America, a lot of money in America. People want beef. There's not enough beef to go around. Prices going up. Chicken or chicken breast, pork chops on the screen, doing a whole lot of nothing. Nothing's fine. Nothing is how you catch up to affordability without causing a recession or higher employment or higher unemployment. Okay, if prices are going outright down, if you're getting deflation, that probably means that economic growth is deteriorating or worsening, and unemployment's going up. So just to hold right here would be good. You're seeing some of that.
Well,
That's
just
a
one
good
thing. One thing on there,
Yeah.
I think to me, the most interesting story about that chart is the spike for eggs, right? And that's the bird flu. For me, the primary story, and there's the other bird flu. Yeah. For me, the primary story that this chart is telling is that the egg prices had nothing to do with President Biden and they had nothing to do with President Trump.
No.
And wouldn't it be nice if some more of these prices had nothing to do with President Trump?
Often, yes, that would be nice. And oftentimes that is the case, is that the politician or the politics have nothing to do with the economics. But in this instance, with this administration, it is obvious that the politics is influencing the economics through war in Iran and the tariffs, among other things, Fed independence. We can go down the list, but that's not what we're doing. We're talking about statistics here, okay?
One more quick question on the protein basket.
Tell me.
We're talking a lot about fertilizer prices. Yeah. That's going to go up, and I think we're going to dig into that a little bit more with food prices. But is the protein basket immune from the fertilizer thing?
No. How do you think they eat? They gotta get feed from somewhere, whether that's grain or corn or whatever it is. Soybean in some instance, soy meal, right? How's this one look to you? This is electricity. Average price of electricity per kilowatt hour in U.S. cities. 2-year chart. Let's just look at it since inauguration. Year over year. Electricity is 5% more than it was in March 2025, Kobi.
Wow.
The same kilowatt. The $100 electric bill is now $105.
And
how about
given
your
the
natural
summer
gas?
that they're expecting in the West, that's going to be insane.
Doesn't matter. It could be cold. It's still going to be expensive. How about this? How about natural gas? 5.8% versus last year higher. Natural gas. Now, deflating, there's some disinflation here. It's going up at a slower pace. But look at this. These figures are terrible. This is the affordability issue. Now, let's look at some employment statistics. Here's the U6. You know I harp on that.
So this is U3, the folks who are unemployed and looking, plus the folks who are hoping to get or currently part-time
They're underemployed. They want more hours but can't get them. They have skills to be, a journeyman but can only get an apprentice job, whatever it is. Okay, white collar worker who can't do any better than retail, all that. Okay, that's trended higher over the last couple of years. I've been telling you that, right? But still at a nice, manageable level. Meanwhile, the 4-week moving average of continued claims. So this is the 4-week average of people claiming unemployment back-to-back weeks. Look at the freak out we had from tariffs, up and up and up. And this was worrisome to me, right? But look since November, a straight line down. Continuing claims are now all the way back to where they were in October of 2024, maybe even earlier. That's a great thing. But couple that with the U6, it's telling me that the employment market is tightening, likely from lack of immigration, but the quality of those jobs is deteriorating because the U6 is rising.
In some ways,
question there. Go ahead.
Well, would it be accurate to say that it looks like the hiring freeze is over and it's ending with lower paying jobs first?
We can't conclude that based on the data here, but sure, that's an inference we could tease out and figure that out. Sure. I mean, the data is right there. It's showing you people are going back to work. Some of this could be stemming from cuts from the administration in terms of food stamps, those kind of transfers. Some of that could be in, but it's not meaningful, Kobe. It's not what the politicians want to pitch it to you as. It's 0.1, 0.2 maybe on unemployment. Okay. It's very, very little. Now, let's look at labor force participation. I like to look at prime age labor force participation. Okay. That's 25 to 54-year-olds. Look at this. It's a beautiful thing. Near all-time highs. People want to work. Let's look at a different way of labor force participation. The employment to population ratio is the metric that of the two that the Federal Reserve actually prefers. How's that look? That is also not far off all-time highs, 80.7%. The high is 81.1 of what? 81.9 of April 2000. The pre-pandemic high going into COVID was 80.6. We're above that. We are above that. Who is not working?
Well, and I'm about to guess because you're flying in the face of the headlines right now.
I know.
A big headline we saw last week was that labor force participation was at its lowest point since 1977. So make it all make sense, Banker Bill.
Who's leaving the labor force? People that are 55 and up. Okay, before going into COVID. So you look at the 2019 labor force participation for those 55 plus was 40.2%, 40.5%, let's call it. Now we're all the way down to about 37%. That's millions of people leaving the labor force, leaving the workforce. And why? Why wouldn't they leave? Why wouldn't these people 55 plus leave the workforce? They have high value assets, whether tangible or intangible. Whether you invested in housing, gold, the S&P 500 over the last 15 years, you've done very well. So it shouldn't surprise you one bit to see these people leaving. These are the very same people that already went through the internet for their career change, okay, as mid-career professionals. They're not dealing with the bullshit again with AI. They don't care. They're out. And it shouldn't surprise you one bit that they're leaving, given government spending, okay, on healthcare, on Social Security for that age group, and their asset portfolios. Everyone else is eager to work. Everyone else wants a job.
Well, I think the other part of that story is that we already were seeing these folks get out of the labor market much earlier because of the pandemic. They were encouraged to retire early. And we would have expected that trend to bounce back a little bit, but for all the reasons that you just said, it just didn't. Those folks kept retiring early.
Well, another one is and I don't have it here to show you, but we could go over. Another one is a lot of these people, in COVID, all of them became disabled. The number of people that are calling themselves disabled in the workforce that's near all-time highs. Everybody's got some kind of disability now, but I'm giving you a little bit of my bias there, but let's move on. So let's look at real GDP. Year over year, quarter versus quarter. So Q4 2025 GDP, right? The current estimate, the latest, which may have been the third revision, right? And each revision gets more accurate. 2% real GDP growth. Hey, that's great. Remember, my target's only 1%. You do 1% or better, you're okay in my book. Is it meaningfully different than any of the prior 2.5 years of the Biden administration?
No,
it's not. And that's not to go out here and give Joe Biden credit.
Right.
Okay. The policies are not working. We're a year in. Everybody's pissed. The vibes are bad. Last but not least, how's the federal deficit looking? Does this look like it's changed at all over the last year versus the prior 5-year period? No.
I was expecting this to be worse.
Well, Kobe, give it time. They now have their supplemental that they're asking for the Iran war for hundreds of billions of dollars, whatever that is. Currently, the deficit for this year, for 2026, is expected to be better than 2025 by maybe $100 billion, but is still expected to be considerably worse than 2024, 2023, and 2022. And I would project if this $300 billion supplemental goes through, that wipes out any of the tariff gains now. Now you're on the wrong side. Now you've wiped it all out. And they'll probably beat the 2025 number. So they'll have the highest deficit since 2021 during COVID. And then you know where my head goes. I got to give you one more, Kobe.
No. Real
the
quick,
IPO market.
No. On the deficit, real quick.
Yes.
On the deficit, I just got to say, it'd be one thing if the deficit was the same and we had a war. The deficit was the same and we did a big spending program on healthcare or infrastructure, whatever it was. The fact that we cut SNAP and healthcare.
Just call them domestic programs. Whatever you want. You're right. You cut domestic spending programs.
Yeah, we took food out of people's mouths and we kicked people off of health insurance, and it didn't put a meaningful dent in the deficit. What are we doing?
No, and it may actually wind up being worse than last year.
Unbelievable.
Now look at the deficit here over the last, what is this, 26-year chart for you. Look at how it keeps blowing through milestones. Look at, here's 200 billion. Now you're teetering on 400. Look at this. And prior to 2020, you never even sniffed $400 billion deficit in a quarter. Never even sniffed it. Now it's not that can happen. Not crazy, right? And this is where I told you over a year ago. The focus for me is it's not to all these cuts or that we have to go and raise revenue from all these places. We just need to get back to the 2019 levels of spending. Never mind going back to like Obama era sequester levels of spending. I mean, settling for 2019, right, in a non-war environment would be what I would settle for. So we're doing all of this deficit spending, and things actually seem like they may be getting worse. What's the best chart I just showed you? Continuing claims going down. Hey, great. People are getting a job. The flip side is maybe that job's not very good. Worse than the prior job they had. That's the best picture I can paint for you right now.
I'm almost contractually obligated right now to, of course, mention that Clinton, Obama, and Biden all lowered the deficit under their watch. For Biden, it's just by a hair. Okay. It's just by a hair. Biden barely came under the level. So I don't give Biden too much credit on that.
What is this, the budget deficit?
Yeah. But, Republicans keep blowing it back up. This is an issue that the Republican Party owns soup to nuts.
Oh, I mean, Trump absolutely blew it out in COVID. And then, and Republicans like to excuse all that away, right? But then any of the, I've said this before, and then any of the Biden spending they say was, too much, not necessary, overzealous, right? But every dollar of the trillions that Trump signed was fine. Okay, we can move on. Those are all the charts I have. I mean, the things don't look as that much different than they did from the State of the Union. The biggest difference now is that the cost of borrowing is higher. Interest rates have gone back up versus what they were maybe 6 or 8 months ago. So we've lost that ground. And you've got a 25 to 35% increase of refined fuels, diesel, gasoline, jet fuel, et cetera. Any of the things that people use to conduct commerce, right, is a spike. So,
and now we're expecting everything to keep getting a little bit worse.
Yeah, I mean, you can tell me now that the ceasefire has Strait is open and all this. Look, 10 ships going through there, bounty or not, up from 3 ships last week is not open. It was 115, 120 ships a week abiding by international maritime law, sailing through there at no fee, at no charge, and now it's an absolute disaster over there. I heard this, Kobe. This is through the grapevine. I heard that war insurance in the Persian Gulf went from $15,000 a year to $60,000 a week.
What, like per ship, per company?
Yeah, to insure your vessel. There's a lot, and there's so much going on there, Kobe. I'm in banking, right? So you hear different things. I mean, forget I don't want to insure it. I won't insure it, or I'll insure it, but here's my price. Even if you agree on the price, you can't get these captains to agree to sail and go through. Right? So there's all these captains that are holding their ships back. There's hundreds of ships up in the Gulf But anyway, look, this is not an episode about what's going on. If you want that, you can listen to better people than me.
Well, I do want to make one point that I haven't heard anybody else make on this point.
Yeah.
We are 100% in guesstimate territory here, but I'm going to show my math. So the Hormuz toll is allegedly going to be, or it has been, $2 million for these ships. And these ships all have 1 to 2 million barrels on them. So essentially what we're paying here is $1 to $2 per barrel.
Yeah, that's like well established at this point. People in my business are taking that as gospel, that's a real thing happening.
Now, I found a study from 2014 that a lot of folks have been using as an estimate that says that for every dollar of crude, the price of crude oil goes up per barrel. That's about 24 cents on average for the average American paying per gallon at the pump. So that means that for every bit of gas you're getting from through the Strait of Hormuz, folks are going to be paying 25 cents to 50 cents more. And that money's going to go straight to Iran. That money's going to go straight to Hezbollah and Hamas potentially.
And that's just the toll you're saying.
That's just the toll. And then, but if you want to do it proportionally for the global market, I think 20% of oil goes through there. So you're thinking about 2.5 cents to a nickel. 2.5 cents of a nickel of every gallon of gas that you buy at the gas station is de facto, once it washes out in the global market, going to Iran, going to Hezbollah and Hamas. And the only alternative option that we have is an open-ended land war with zero guarantee of success.
I'm sure there are other options that are not being discussed.
I think
look,
the options
don't
are,
ask me. Look,
yeah,
I don't know.
You're right.
Don't ask me to find an off ramp for this.
Banker Bill, you're absolutely right. This is an economics podcast. Neither one of us is qualified to speak on that. But I don't like it. I don't like the fact that a year ago things were starting to finally trend in the right direction, and now we're all basically paying terrorists a couple of cents per gallon of gas.
Look, every bit of this second Trump administration to me is inflationary to some degree. Wars, the deficits, tariffs, pushing artificially low interest rates, attacking Federal Reserve independence, immigration policy, fighting solar plants, fighting wind plants, fighting other energy stuff, corruption and insider trading that we've observed, sticking himself or a lackey into every business transaction, every merger, every buying agreement, every leveraged buyout transaction. All of it creates friction. All of it's inflationary. And the only thing that I hear in any kind of financial meet at this point from his lapdogs are just wait till we get on the deregulation train. Yeah, I've heard that one 100 times.
That's funny because I've heard the exact opposite. The Trump administration has been threatening oil companies and especially fertilizer companies that if they price gouge during this crisis, the Trump administration is going to come down on them like a bag of bricks. And, he's implying that, no, it's not my fault that the Strait of Hormuz is blocked. And now all of a sudden, all these prices are going up. It's the price gouging. It's the price gouging.
It sounds a lot like greedflation.
I was about to say, you hated it when the Biden.
No, it's garbage. It's a garbage argument. It's garbage. Look, these fertilizer companies are charging market price. If I tell you that, hey, next year, fertilizer may cost 50% more, how much do you want to buy right now? You want to buy me out right now? You might try. You and everybody else. So that's going to drive the price up. I mean, he created this supply dynamic, the supply imbalance that we have right now. I mean, I don't know. You can make different arguments of political arguments of what it had to happen or this and that geopolitics. But look, economically, this is a supply imbalance that the United States, executive created, right? The White House created this. No one else. There was no terrorist attack that Iran. Iran didn't blow up a vessel in the Strait, right? In fact, the only ship that I've known that's been sunk in this was an Iranian frigate off the coast of India, which Pete Hegseth made sure we all saw, right, with the submarine. That's the only ship that I've seen sunk in this whole thing so far. So, Iran said the strait's closed. What'd they do? They say, give us $1. Hey, these shippers are willing to pay it. They're paying it.
And
It's a toll.
in a lot of
Oh,
ways, a lot of
can we,
times,
wait. Maybe this isn't a funny joke, but like I just thought of this. So there's Easy Pass. Can we call it Iran? Like the toll you pay, the agreement is the Iran. It's not. I know how to pronounce Iran, but I just think no,
no,
it
I
didn't hit.
understand what you're
Doesn't
saying. And
resonate. Yeah, it's lame.
well,
Sorry.
I was joking with you recently that what does Iran's AI propaganda say about America's AI advantage? Unfortunately, they've been killing us with the puns and with the economic warfare. It's been
They're like it's a lot of like Lego animation, isn't it?
yeah, yeah,
Interesting.
it's weird raps. And again, I don't know what to make about this. I'm not qualified to speak on this either, but the Taliban and Saddam Hussein were not winning the shit talking war on Twitter.
No, it's a totally different way to wage espionage now, or economic war, or political war, right? I mean, that's the danger of social media. One of the many.
And it brings on another topic that we've touched upon a few times recently. I'm so glad I put my foot down and said, we need to do an episode on the dollar. There's so many great keywords would be able to fit into the podcast description. And you were like, nobody's going to want to talk about that. Everybody's going to be bored. And now we all understand the petrodollar and we're able to follow the twists and turns that we've got again here in the Strait of Hormuz. We talked about it a little bit last time. You were not concerned about the fact that Iran is accepting yuan, Chinese yuan, as payment. Your take on that was essentially this was the oil they were selling to China on the black market anyway. If anything, that's just shown some transparency on those transactions. That's not going to move the global market. That's not going to threaten America's petrodollar status. But now they're also accepting cryptocurrency.
Iran is.
Yeah, Iran is. And then on top of that, you have the fact that Asia is forced to move away from the United States from this, and they're trying to really build up as much renewable energy as possible. On the other hand, America is determined to, produce more of its own oil. So there's going to be less dollars flowing to us as part of those transactions. There's a Bloomberg article really concerned that the end of the petrodollar is here, and it's going to be that the Strait of Hormuz crisis is the catalyst. Are you any more concerned about that the longer this drags on, or are you kind of the opinion that it's not great? It's going to put a little bit of a dent in the reserve currency status of the dollar, but there's just what else are you going to do?
I would say I'm not concerned. The what Iran is putting out there is a very small amount of oil relative to the global market. And that's why they're taking such rash actions in the Strait to disrupt the market, because they wouldn't be able to do so on their own otherwise. That said, if they could take US dollars, if they weren't sanctioned, they 100% would. Right? So they're being pushed to take another currency. Now, with respect to Aaron Brown's article, I would say she's right, but a lot of the stuff has to be true. So a lot more than Iran, think Saudi Arabia, Kuwait, Oman, the UAE, etc., would have to take non-dollar assets in exchange for oil, right? But if she's right, then sure, the dollar weakens, U.S. debt costs rise, because right now with the petrodollar, you're basically getting free or cheap financing by way of the Middle Eastern countries there buying treasuries with the dollars they're paid from the oil that's being bought. And if U.S. dollar weakens and debt costs rise, then the U.S. economic muscle behind, the political muscle falters. And for you and me as consumers or as citizens of the country, it's a double whammy for us, because your purchasing power diminishes because the dollar is weakening versus other currencies, and the cost to borrow increases. So the interest rates are higher. So, look, it's not good. It's not good to have alternatives in this respect. You want to be a monopoly in this way, right? You want to be stable. You want to be the country or the currency, the medium of exchange that people gravitate towards because of stability, liquidity, access, whatever it is. And they will accept the sanctions regime of that currency or of that country's currency, because the benefits far exceed the what's the word I'm looking for? That exchange, right? if you're not a nation of laws, and if you're just going to do whatever the hell you want, then what's the benefit of having it? Liquidity can't be the only thing. Depth of the currency, access to the currency can't be the only thing, because there's enough other options out there to take them on.
Well, you did actually make me feel a little bit better, because initially I was thinking, what if 20% of the world's oil is traded in non-dollars? But of course, you're right. That's not the case, even if this is the status quo and this is
No, and
as
that would
gets
be
locked
very
in.
hard. Again, it goes back to the point I made about other reserve currencies. Like if you're India, okay, and you want to buy a bunch of oil from Oman, let's just say, or if you're Oman and selling it, if you're Oman and you're selling this, you don't want to sell oil in rupees and baht and shekels and this. You don't want all that. You want to do a couple currencies. Maybe you do euros, dollars, and gold bars to some extent. I don't know, but you don't want to be getting involved in a half dozen or more currencies. No one would want that.
Well, Iran is taking, of course, cryptocurrency for the toll. I'm sure they're accepting cryptocurrency for some of their oil as well, now that it's no longer sanctioned.
Kobi, I'm so interested to know like the mechanics of this. Like, are they discounting the crypto, or are they putting a premium on it?
Right.
Like if
when does the price get locked in? Is it when they send that email?
Right. And how do you access it? If I say it's $1 a barrel, is it $1.10 a barrel in Bitcoin equivalent because of the fluctuations in Bitcoin day to day?
Well, I think what they've said is as you're approaching the strait, you need to email them with confirmation of payment.
I did see that. Yeah.
And then you get let through those two little islands.
Okay, fine. But that, like, the fact still stands. Like, I wonder how they're discounting it, if at all.
And one big question is, what cryptocurrencies are they
taking at all? Right.
Iran specifically mentioned Bitcoin. A lot of folks were reporting last week that potentially USD1, the stable coin from Trump's World Liberty Finance Company, was going to be one of the payments accepted. I really went down a rabbit hole on this. As far as I can tell, Iran has never, ever, ever said anything about USD1. But the reason why some very serious commentators are sort of presenting this as a possibility is because even though they said Bitcoin, Iran said Bitcoin, they've established a pattern of getting around sanctions with stable coins. They may even prefer those stable coins. And so USD1, one of the top 10 stable coins, absolutely an option here. And the fact that you have a stable coin where 74% of the value of selling the coins from the initial company goes straight into the Trump family's pocket. They own, I think, 51% of the company. They have a right to 74% of the value. Maybe not the profit, the revenue. Well, I don't know. It's cryptocurrency. What's the overhead cost? And essentially what that establishes is one of the craziest incentives of all time. Okay, if they were to really take USD1, if that became the stable coin for paying the toll, now all of a sudden Trump has this terrible incentive where he wants the strait to stay closed so that he's getting in on the toll payment, but he wants essentially the sanctions on Iran to be lifted to increase the volume of trade.
It's shocking. Go through that without laughing. So what you're saying is he's bet his coin WLFI.
No. I'll explain what WLFI is in a second, but we're talking about USD1.
Okay, USD1. He has an incentive through his business ventures to keep the strait closed and take off Iranian sanctions, which has happened to an extent.
Yeah, absolutely. That's actually
right,
true.
Because Iran is now able to trade oil at sea, right? Which Scott Bessent said was chess move. Looks stupider by the day. He said that 3 weeks ago. And the strait is still closed. So that's another conflict of interest. A new one I wasn't even aware of. Thank you.
Well, so I ended up going down a huge rabbit hole on this, and I'm just going to lay it out real quick because the amount of scandals that are involved in this one coin, this company that manages this, are crazy. So the company is World Liberty Finance, and they were in the news a lot last couple of weeks. First was this thing with the toll, with the Strait of Hormuz, and that was their stable coin, USD1. They also have a more traditional crypto coin, which you just mentioned, WLFI. And that lost 74% of its value since August. It's down to 8 cents. But the reason why it made a big splash last week is because one of the investors, Justin Sun, came out and said on Twitter, screw this company, screw Trump. They installed a secret back door into the I don't know if it was the coins or the marketplace or whatever. And they can, if you trade in this coin, they can come in and freeze it at any moment. I have $80 million of coins. I've been trying to sell them since September. They froze my account. And now I've lost, it's all the way down to 43 million. I've lost almost $40 million in this coin. And that sounds bad until you realize that Justin Sun is also a complete fraudster. That's how he got involved in this company in the first place. He had a really big SEC case against him. He bought $75 million of coins from World Liberty Finance. And then all of a sudden, you know, the case was dropped and he got on the board and he has all these coins now. And that's not even the worst corruption that's involved with World Liberty Finance. Because if you remember the UAE sheik who spent $500 million, paid $5 million into this company so that NVIDIA AI chips would get unlocked for the United Arab Emirates. That was also this company. That was the same deal. We found out about it a little bit late into last year. The deal was made before inauguration. So $500 million into Trump's pocket from the United Arab Emirates in exchange for AI chips. Again, capitalism, nowhere to be found in any of this. And then the latest scandal involved in this company is that they just took out a $75 million loan and used 5% of their own coins as collateral. That coin that's down to 8%. So folks are going, this sounds exactly like Sam Bankman-Fried, like that whole collapse. So the amount of crazy crypto things that are involved in just this one company are insane. And that's not even, you've heard of the Trump coin, you've heard of the Melania Trump coin, you heard of those rug pulls. That's an entirely different crypto company that the Trump family controls. They are raking in probably billions of dollars at this point.
The only people buying this stuff are like insiders that are trying to curry favor, right? This is all money laundering scheme. There can't be anybody.
I mean, I don't know how you could possibly make a different argument for the non-stable coins that are involved here. With the stable coins, theoretically, you could say that, you know, those are meant to be the transactional coins in the first place. That's why they're different than the free-floating cryptocurrencies. But I would, and all the incredible innovation and technology and transactions that these things unlock, they're going to be so much better than Zelle and Venmo. You know, Venmo sucks. That's why we need a Trump stablecoin.
Right.
If Iran has established a pattern of preferring stablecoins to free-floating cryptocurrencies in order to get around American financial sanctions, how is this nothing other than a better managed crime currency?
Sanctions avoidance regime. That's probably what the whole thing is set up for so that, you know, the assets can be protected when eventually there's a change in administration and, you know, they claim witch hunt and the whole thing starts anew.
I tried to keep an open mind about cryptocurrency, and it is, if I like it, whether I like it or not, it is legit at this point. It has been locked in. There's so much institutional money in this now. There's so much federal regulation with this stuff now. It's probably here to stay. But I'm of the opinion that this is a direct threat to America, a direct threat to our economy. And this is just not, there's no reason to engage with this stuff unless you are committing a crime.
I think it's a lot like the Kalshi stuff. The only reason why you should be placing any wagers on Kalshi is if you actually do have insider information.
Federal government finally told its employees to stop doing that.
Oh, they just told their employees to stop doing it. I'm glad.
Yeah.
All employees or just the ones that are outside the White House?
Yeah, that's a great point.
Okay.
Well, I mean, you know, there's some folks who think Barron Trump is the secret polymarket trader who's been.
Just remember, I did give them a fair shake. Remember the first 100 days, I wanted to say B-.
Well, and I think it's also interesting. You tried to give them a lot of credit for the cryptocurrency stuff. I mean, in the sense that you were saying, these guys spent a lot of money trying to get Trump elected. They came in, they passed a whole bunch of regulation that makes sense. That's good for this market sector if you believe in it, unlike me. And they did things like the what was it, the strategic Bitcoin fund or whatever,
Strategic Bitcoin Reserve.
Yeah, and the Genius Act. And to me, that's one of the craziest narratives of this story. The fact that even the cryptocurrency investors who got legal help from the Trump administration, even they're now turning on the Trump administration because they're messing with the money.
Yeah, I mean that's right because all they got they thought this was going to be their golden goose, that Trump was a crypto evangelist and not just someone who saw an opportunity.
Well, we can't mention cryptocurrency without mentioning, of course, the fact that legendary investigative reporter in the New York Times, John Carreyrou, says he's figured out who Satoshi is. It's this British cryptographer, cyberpunk type guy, Adam
Sure,
Back.
it is.
And apparently he owns 70 to 80 million dollars of Bitcoin. And he, it's funny. Some folks are saying he doesn't want to be kidnapped. Other folks are saying he wants people to believe in Bitcoin, and to believe in Bitcoin, you have to believe in decentralization, and a decentralized movement cannot have a figurehead at the top. You're not buying it.
No, I don't. I actually don't really care. My the best theory I know of, the one that makes most sense to me that I see that I actually maybe not I shouldn't say makes the most sense, but seems the most credible is that this is some kind of foreign or U.S. government intelligence operation.
I don't want to believe that the CIA is behind
Maybe
it.
it's not the CIA, but it could be.
But like that's not a crazy theory.
Adam Back is a perfect CIA agent cover name.
I don't know that much about Adam Back, but I do know that we learned way too much stuff about Bitcoin in the Epstein files to dismiss these conspiracy theories. There are crazy shadow networks of highly influential people operating outside of sovereign jurisdiction in terms of setting all this stuff up. But I really
have need for crypto. Yeah.
I really hope the US government had nothing to do with this because, as I said, this is only going to screw the United States, screw our economy, screw the American worker. When somebody messes with the dollar, you and I can do something about it. Okay. And I understand that voting might not feel like the most impactful thing in the world when Donald Trump is making billions of dollars in cryptocurrency, but there are consequences. We have levers to pull. If all of a sudden cryptocurrency becomes the dominant currency and somebody messes with that, or somebody comes and steals it out of your crypto wallet, or somebody, generates so many coins that they can crash the entire market economy. All these crazy rug pull scenarios that we've seen with all of these tiny little cryptocurrencies have come about, some of the big ones even. There's nobody can protect you. Nobody can protect you at all. And at least with the dollar, when somebody screws up the dollar, we can kick him out of office and vote for the next guy.
I would say that the dollar is much more decentralized than any of these cryptocurrencies.
Especially if Trump's company is coming in and freezing your account.
A handful of accounts, let's say, own 10%, 20% of the outlay. How could you say that that's a store value? It's not.
And I know that I'm being hyperbolic on this stuff. I'm taking the doomsayer position on this stuff. I'm going pretty anti. And as we were getting ready for this episode, I actually gave Banker Bill a little bit of credit because he told me when they started the crypto reserve or strategic reserve that there's no way that they would actually go out and buy cryptocurrencies. And so far that's turned out to be the case. I think there was a senator who wanted to go out and buy a whole bunch of Bitcoin.
Oh, it was Loomis from Wyoming, right?
Yeah, that's right.
She done? She's not running? Is she up for re-election?
Oh, what?
I kind of remember some news about her.
Yeah.
I might be thinking of Joni Ernst.
No. Yeah. Joni Ernst is definitely retiring.
Okay.
But anyway, the point is, it's not just me saying that there's nothing here except for crime. Rubio went on national television and said, in 5 years, we're not going to be talking about sanctions anymore. There are not going to be any more sanctions anymore because these companies and these countries are going to be transacting in cryptocurrency so much, there's just not going to be any point anymore.
Right. And he said that when Biden was president. I wonder what changed.
We talked a little bit.
There's no actual values. That's the That's the biggest problem. There's no duration of a plan. There's no forward outlook of continuing a plan. But I'm not a doomsayer on this. I will just say this: if I can make a segue into gold,
Yeah.
okay. You may have heard this week that France has completed a transfer of gold from New York to Paris. And basically, what they did was they just found buyers and sellers to be able to sell the gold they had in New York, a piece of it. I think maybe a proportion of what their holdings are, maybe 5-10% of what they have at the Federal Reserve Bank of New York, and move that back or repatriate that back to France. Interesting chart I want to show you, something you probably haven't seen before. Here is the evolution of foreign gold holdings held at the U.S. Federal Reserve. So this would be things like France, Germany, China, Poland, any country that has gold on deposit at the Federal Reserve. And you see the collapse of the Bretton Woods system, which we're not going to cover here, and then a long, continuing 50-year downtrend of gold held at the Federal Reserve of foreign nations, declining from a high of almost 15,000 tons in 1960 to only around 6,000 tons today. I think this reflects a world of more uncertainty, and certainly one that doesn't trust the United States.
I saw that France made $15 billion.
Yeah. Yeah, I mean they were good traders. The market was going their way as they repatriated, and the timing of the trade, they made some money. Good for them. I'm sure that was a byproduct. But yeah, I mean they're probably going to keep moving their gold. I saw a statistic, Kobe, that at least at the Federal Reserve Bank of New York, of all the gold held there of foreign governments, Germany alone has 20% of the total.
And
other European nations have been withdrawn.
In Germany, I haven't looked into it lately, but there's a big political push, populist push for a while to audit the gold. We want to make sure.
Yes, and Rand Paul wanted to do that, and I was against that. I think that's a giant waste of time.
No, the Germans also wanted to do it.
Oh, well, yeah, I would imagine, yeah, any politician of that ilk, I could imagine, would be calling for it. Sure.
Now, there was a weird stat that apparently non-monetary gold was our biggest export in February.
What the hell is non-monetary gold? Where did you see this? Tell me more about non-monetary gold.
I'm sure I'm getting the phrase wrong. Non-monetary gold. No, I'm getting that right.
Like real gold? Gold bullion?
The U.S.'s single biggest export in February was, quote, non-monetary gold. Gold has been the U.S.'s biggest export in 4 out of the last 5 months. Trump is partially settling U.S. trade deficits in gold de facto. This is not bearish for gold.
So interesting. They're kind of calling out what I just said, right? Gold's leaving the country.
Do we care about that? I mean, obviously, we want to be a bank to the world.
No, in any single day, in any single month, none of this stuff matters. But I'm from a position that I believe these things will manifest themselves to us in terms of higher costs and higher cost of debt, higher interest rates going forward. Gone are the days in my opinion, Kobe, you could forget about our parents' opportunities to every 5 years refinance their house and ride off into the sunset. Okay, and I'm not saying they all had it easy, but you could forget that, right? We are in a new era now. You are in an era now of things not being apparent, of the U.S. not being a top dog, of there being a multipolar world. It's not that things are always great or that there wasn't bad things happening. It's that the United States was able to set the rules, and people accepted it. Now, maybe the United States still sets the rules, but people aren't accepting it. They're moving on. They're moving elsewhere. That's a detriment to us, right? Because we free ride off of their investment. We were able to free ride for decades of foreign governments holding their gold in the United States, of Saudi governments denominating their number one export, oil, in dollars, and then buying treasuries with those dollars to finance United States government budget deficits. Okay, I think that era is over. You've heard Mark Carney say it. He said, "This is a rupture." There's no, I mean, there's no white knight, Republican, Democrat, or other party coming in and going to repair the damage that's been done over the last 10 years.
It's going to
You
take
can
at
forget it.
least a generation. At
Ain't
least.
gonna happen.
Oh, I mean, well, there I'm.
It could happen, but like in the immediate term, I mean, like quick fixes, like, oh, we just need to do X, political talking points, 30-second Instagram reels. You can forget it. It's not gonna happen.
Just to bring this conversation full circle, we talked a little bit about previously this amazing metaphor that Martha Gimbel, the executive director of the Yale Budget Lab, made, where she said that the U.S. reserve currency status was like the city slicker boyfriend in a Hallmark movie. Right now, everything's going great in our relationship. Maybe there's some warning signs there, but there's no hometown boyfriend who's ready to steal our girl just yet. But the holidays are coming up fast. You said that's a really great point. That's a real fun metaphor. But at the end of the day, who's going to take the chip? Who's going to actually put themselves in the running to be the next reserve currency? And for a whole bunch of reasons that you listed, manufacturing being the top one, exports, China doesn't want it. Here's my question to you. Is cryptocurrency the workaround there? Does cryptocurrency, legitimizing cryptocurrency, allow countries like China and India and Iran, etc., reap the benefits of taking away our bully power as the United States, to basically take our reserve currency benefits away from us without taking on the costs and the cons related to having that reserve currency?
I don't see how a cryptocurrency in any of their current forms replicates what the dollar can do as a medium of exchange. I just don't. And what here's the, it's not that, countries will just take on crypto or do something else. It's that if we're not all using one currency, whatever that is, if we're all living in this low trust world, we are all going to be made poorer and worse off for it. Everybody. If India has to go make rupees into Bitcoin to pay Iran, which Iran then makes back into whatever they use, I don't even remember at this point. That's not good for Iran. That's not good for India either. Maybe good for Bitcoin intermediaries, but to be worrying about that and not have this stable medium of exchange. Another piece of it, Kobe, too, is that if you're a foreign government and you have to denominate in another currency that's not your own, you want to be able to negotiate with somebody on the other end, right? Even if that's someone crazy, people think he's crazy, like Donald Trump, right? Or even if it's, and I'm not making a political point, but even if it was a madman, any political leader will negotiate with a madman or a maniac, right? And they'll take that scenario because they think they can convince that person over some just regimented, no way to negotiate, no means of understanding, hash Bitcoin. Right? It's the fact that I think we're moving to this world where everyone's afraid, no one is trusting, and that has significant costs.
And I think it's all Donald Trump's fault. Thank you for joining us for another episode of Is It Bad for the Economy? Folks, please keep giving us those reviews. Keep asking your questions. Keep sharing this with your family and friends. We are trying to grow as hard and as fast as possible to make sure that we can improve the economic conversation happening everywhere, because we don't want to have to do the podcast episode where we officially declare the US dollar dead as the reserve currency of the world. On the other hand, that would probably mean that we'd kept this thing going for a fair bit of time, maybe a decade or so. So, maybe it's not all bad. We'll see you in 2 weeks. We hope you enjoyed this little different format episode here, and we'll talk to you very soon. Keep an ear out. I've got a big take on data centers coming that I'm excited to share with all of you. I'm going to be recording that a little bit later in the week. And because I think the only thing we didn't get to this episode was probably data centers. Thanks, everybody. We'll see you soon.
Thank you.